Welcome to the big show. We are here at a new time, 2 p.m. Eastern. Paul, I'm freaking out. It's a new time.
And
It's
look,
so
I mean, we have I think it's our highest number of people waiting to watch ahead of time. So maybe
You're here. Mo's here.
This new time is so great.
Oh yeah, we were
to the
so
gym
much less
before.
stressed. We
No
were so much
stress.
less rushed for time. We sat there, you know, we threw.
We welcome you in. New
muted our
patrons.
faces.
Another record month for patrons and subscribers and signups, Paul. We welcome all the people. Paul, I would say this community we've created in our Patreon, they are so welcoming to new people, Paul. I would imagine there would have been some sort of power struggle, but our OG patrons have been with us for months. They welcome in these new people. They welcome the fresh ideas that they have. I get comments all the time supporting us and thanking us, Paul, and it's just very wonderful that you guys and gals are out there helping us. And we see these OG. Jack, I see you there. Red, I see you there. We welcome everyone in. If you're new, if this is one of your first streams, maybe Keen, I see you there. Type in where you're from in the world. We love hearing where everyone's from. That's great to see. Paul, any updates on what we're giving the patrons moving forward and frankly, getting off of Patreon?
So the plan is by the end of this month to get off of Patreon. What will that do for you? Well, you'll save sales tax because we're not big enough for a temporary period of time, because we're not big enough in most areas to charge sales tax. So you'll save that money. You will get auto renewed. That's already happening anyhow. We're building basically the same platform on our own. Guys, we're going to be starting to do more content for the software, for our app, and there's so much coming. It's going to be so much better. We plan on doing 1 or 2 videos a day just for the app, plus live streams every so often. I'm gonna go live a lot more. We just bought a camera for my desk. I'm gonna do silly things like anytime I wanna talk about any sort of investment, I'll go on there, talk about it, hear what you guys have to say. Play chess, even something as silly as go play 10 games of bullet chess, just for fun, because we are real people at the end of the day. We're not just these people who sit behind I'm normal, I take naps, I take breaks, I try to sleep in. I'm not any different than anybody here. So that's gonna be a big part of it, and we're growing like crazy, so it's about making the growth more organized and have people know that, hey, we're gonna do videos on YouTube, but we're gonna put a lot of emphasis on the app to make sure that the people who have trusted us with their money and have bought the service get a lot more for it.
We are taking donations today, as we always do. If you want an individual stock request, as Jonathan just put in, it's $50, and it goes toward Mo. Talk about the charity that you selected today.
So I picked NAMI Brevard. So those of you that don't know, NAMI is a national brand, but this is the National Alliance on Mental Illness, and this is specifically in Brevard County. It's in South Florida. So what they do is they do a lot of focus groups, family support for loved ones with mental illness. They're trying to get it out more to teach the, law enforcement and fire, EMS and everything about mental illness. And they're trying to work with jails and governments and et cetera. So this is a great thing for it. Mental illness is definitely a big hurdle in this country.
So all donations today will be going toward that charity. And Paul, we already have 3. We're off and running. Some people are saying, by the way, folks, currently, if you'd like to get access to our software, you do indeed have to join the Patreon. Now is a great time to join because Patreon double charges you at the beginning of the month. Paul, are you going to say something, baby?
Oh, my computer screen.
And so moving forward, if you'd like the software today, you have to join Patreon. Moving forward, there will always be a Patreon. Some people are not going to sign up at everythingmoney.com. There will always be a Patreon. But for those of you who would like to switch over to our billing system, not get double charged, not have the rigmarole that is Patreon.
And no sales tax for quite a bit of time. We can't guarantee it forever, but for quite a bit of time, there'll be no sales tax.
And you will be staying at your current rate. So when we're switching over, no rates will not go up. We're just creating the platform for you. And so we've actually, very surprising, Paul, created one of the world's top Patreon pages in the past 9 months, not even.
And
go ahead.
For those of you who are not patrons yet, guys, 84 cents a day, less than a cup of coffee. Look at all the things you're going to get here. Mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, exclusive content, access to us, real estate calculator, big Discord community. Guys, this thing is growing like crazy. We're going to have, and it's very organized too. It's not like you go into a chat and there's 1,000 comments in a row. We're structuring it as we grow to make more and more chats so people can discuss the things they want to discuss. Every so often people tag me. I probably catch one in every 40 of them and I make a response. It's just the way it is, but I focus on the Paul Super Shorts. But yeah, you'll also be able to get a discount on the new software for paying in full for the year. So guys, it's great. It's wonderful. You're crazy for not signing up. 84 cents a day. Should we go to Conagra?
Please do. Actually, Scott, welcome in. Scott just said he's signing up now. Welcome to the Patreon. You'll love it, my friend. Let's get after our first stock of the day. This is from Jonathan Montgomery, a dear follow of ours for a long time now, Paul. And he did queue up. The ticker symbol is CAG, Conagra. I don't know what this is at all, Paul. Can you let us know what this
aren't they the ones
does?
that do like all the
Their food?
Yeah, prepackaged food.
Yep.
Oh, okay. Conagra, is that what it is?
Yeah. Healthy Choice, Banquet, Bird's Eye. Okay. Slim Jim.
Yeah.
I own Slim Jim.
Yeah.
My kids love this crap.
Yeah.
Okay, Conagra Brands, Paul. CAG is a ticker. Go ahead. What is the market cap of this puppy?
$16 billion company, 12 PE, that's a check, and a profit margin of 11.6%, also a check. They pay a nice little dividend of 2.8%. That's $445 million. For those of you who know, you have to check your free cash flow and make sure they can cover it. And even on their 5-year average, they can more than double cover it, which is great. Low return on assets and return on invested capital, which I expected. It's not exactly a sexy company, not some big margin, not some big growth level, et cetera. So far, though, we have 2 check marks.
So if you're new to the channel, actually, we're going to go through our 8-pillar process of looking at the fundamentals behind this company, what they make, if they're selling off shares, their current assets, free cash flow, and then we'll head over to Mo, who does the trading with the Bidnas Nation. Bidnas is the middle Patreon tier where you can join. If you want a little spice in your life, like Paul has, and a little more excitement, you can trade these stocks on a day week or monthly basis with Mo, and he will guide you all the way. So, Paul, let's get after pillar number 3. You know these pillars, Paul.
7.83 to 11.18. Make note, guys. Look in the back past here. I bet you they sold off divisions here, and then between 18 and 19, they probably bought a company. Because this is a big jump for such a quote-unquote boring company. There's very minor growth. Don't expect much more. Net income, 639 to 1.3 billion, almost doubled. Now, last year, guys, restaurants were closed. So what did that mean? I have to think that meant there would be a bigger group of people buying more packaged food so they could eat at home, etc. So keep that in mind. Shares outstanding, we went from 419 to 480.6. They are going down from last year. I got to think the acquisition, they probably used stock at some point to buy the company. So it's still an X on the shares outstanding.
Pillar number 6 is current assets over current liabilities. And this pillar, Paul, might get the axe
This
soon.
pillar is definitely getting the axe.
Okay, go ahead.
2.7 billion versus 3.3. Guys, we're changing this pillar to be more of a focus on total long-term debt relative to free cash flow. There'll be some sort of metric like that, and maybe also interest expense relative to free cash flow. I want to make sure, or relative to EBIT, earnings before interest and taxes. So we might do a combination of the two. We might just do one of them. The bottom line is debt is not really factored into our analysis, which I want to have people just understand it from the standpoint of, boy, this company has a lot of debt versus not. So they are negative on the current assets, the current liabilities. Cash flow. All right, guys. 1.1 to 1.5 for an average of $1 billion. 1 billion times 20 is $20 billion.
The current market cap is 16 bill, Paul.
So it's a check. Now the question becomes, after Mo does his charts, this is a very slow growing company. They have made, they bought a division here at $5 billion, like I said, between 18 and 19. That was accurate. They sold a couple divisions off. So we'll put it in the stock analyzer tool, but don't expect major growth in revenue.
Most of the wise, most of the great, the handsome, the muscular, a lot of the bid-ass ladies love your svelte biceps and chesticles. Show us what's going on with Conagra and the trading.
So right now, you kind of just see it's just draw a line right there, and it's kind of sitting at a resistance point. I'm sorry, support point. So if I'm you, I'm just waiting, let this thing turn up. Let's go over to a daily chart. That one might be a little bit more exciting. Maybe not. Well, maybe. I don't know. Let's see here. Seth, what do you think?
Come on, Mo, give it to me. What are you doing over there?
So the problem is we're under these 4 moving averages.
Yeah, this ain't.
But the good news is you're coming up through the sweet spot here, and you can actually make a little bit of a run from maybe 33.30 to 34.30.
But
so
Mo,
there's room in here to swing it.
That volume. Oh, okay, go on.
Yeah.
I was gonna say,
yeah,
keep going.
The volume is lacking now. But if you just look back 3 months, this is a very inconsistent volume stock. So if you want to do anything here, probably a swing trade. Long term, just be very patient. Let this thing bounce off the support level that it's at. Then you'll be good.
The last piece of the puzzle here is actually figuring out what we want to pay for the stock price. We've analyzed the company.
Can I ask a question?
Please do.
Mo, if I wanted to successfully trade here, how much time do I need to spend every day on this?
For long-term stuff?
Yeah.
10 minutes.
That's what I told somebody just a couple days ago.
Yeah,
10
minutes.
10
how
minutes
many
a day.
positions would I have?
5 to 10. That's what the Employed Trader series is perfect for that. That's basically what I'm trying to do. It's get in, execute trades, look at them for 5 to 10 minutes a day, and that's all you have to do. But that's from a long-term perspective. You're trying to get in a stock at the bottom, ride it up, ride the wave through that sweet spot. Or short it. And that's what we're doing in the...
So I have, because I'm telling Mo, I have some money in my personal account that's just sitting there, and I don't want to invest it because I want to have it readily available, but I also want to generate some income off of it, even if it's only 5 or 10% a year, which is still... I think a conservative number.
Yeah.
So I'm looking at going, maybe I should start doing this and spend 15, 20 minutes a day trading 10 to 20 stocks.
Yeah.
That way I can have 20 positions open on a company.
Now, to be transparent, like you say, I have never seen it so difficult to trade long-term in a market as it is right now. Just because you cannot, and those of you that are in the bid and ask nation, you can't catch a trend going up. So right now, I think it's much easier to do swing trading, like I said, just because you can get in and out, but that's gonna require more time. That's gonna require maybe an hour a day. I don't know if you would want to do that.
No, probably not. But like the momentum stuff.
Now, I'm not saying that it's impossible. I mean, just if you look at Apple, 2 weeks ago, in a 3-week period, we made 13% on Apple. So it's there. It's just, you got to find it.
Okay.
Yeah.
So guys, the stock analyzer tool, you make your assumptions. If you have this, you watch the video. I'm making very conservative assumptions on Conagra. Revenue growth 0.12. Share changes keeping the same. I'm putting low PE because it's not a sexy fun company. 10, 12 and a half, 15, and a high return. Yeah, guys, this is a little overpriced here. It's currently at 33 bucks, but it's not far off. Can you buy it for mid-20s? Low to mid-20s, I think you're going to get yourself a value investing perspective. From the high end, maybe it's probably selling for what it should be itself right now. To get about a 10% return on your money, maybe that's exactly where it should be. So I'm looking at this going, if you want to buy a stable company and you assume it's going to grow 2% a year, buy back shares, have a reasonable profit margin, then you could make your money. But I still think somewhere in the 20s is probably a safer bet for this. So maybe you sell some puts in the mid to high 20 range and dollar cost average all the way down to 20.
That is our take on Conagra. Thank you for Jonathan for the donation. Paul, the next stock that somebody wanted, a Waker Degree said he wants to look at a Canadian oil company. What do you want to look at this? PXT? PXT?
Parex Resources?
Let's see. PXT, he said. Scroll down a bit. Does it say what it is?
I don't have that one.
Yep, crude oil.
Crude oil. Do you want to take a look at this?
Let's take a look at it. Now, guys, one thing I will say, when it comes to commodity businesses where the revenue and profit's inconsistent and the commodity price are inconsistent, you got to have a much more strict valuation process because you're not going to make money consistently, in my opinion, when prices are jumping up and down like crazy, which commodities tend to do. So it's a $2 billion company, 13 PE, check mark, profit margin of 24%, check mark. Return on assets, pretty decent, double digits, almost no dividend. Last year's free cash flow is 171 million. 5-year average is 211. So last year's is lower than the 5-year average. That says that it's something to look at. Now revenue. I mean, look at this. Look at this, guys. Ready? 494 to 615. Check mark. But we had $1 billion. Fuck.
Check, please.
We had $1 billion. Mm-hmm. Thank you. We had $1 billion just 2 years ago, in the last 2 years. So I don't know why that is.
How about profit growth? Yeah, profit
1.29 million to 150 million. Check mark there. But again, not consistent.
Yep.
Not consistent at all. Shares outstanding.
Pillar number 5.
153 down to 130. So check mark there.
Oh, nice. Okay.
Yeah, so there's a few check marks here, but I think it's a little misleading.
Okay, how about current assets over current liabilities?
470 million. Oh, wow. Yeah, they have plenty of cash on hand. They have $250 million more in cash. So really the company's about a $1.75 billion company. That's great. Now free cash flow. Let's see how consistent free cash flow is. Actually, it's not bad. 123 to 171 with an average of 211 times 20 is $4.2 billion. So that's a check mark there. So you have to ask yourself the question, like it's selling for 10 times free cash flow right now, less than that. It's selling for 8 times the average and 10 times last year's free cash flow. So Mo, go take it away while I put in the stock analyzer tool.
Yeah, Mo, are people trading this?
So
stock?
This is Canadian. So it's not something that I typically trade, but I'm on Yahoo Finance right now. So we do have an uptrend going right now. You can see the last 2 days have been pretty solid for them. Let's see, if we just draw a line right here, that's going to be a support and a resistance point. So for them to break through and get through there, they're going to need a lot of volume. They had it yesterday, they don't have it today. So again, something that you lack a lot in this market, and I guess you're lacking it in Toronto markets now, is you need to have volume to break through resistance points, and that's where you're at right now. So I don't know where moving averages are. I'm assuming that right where I drew this line, there's a lot of moving averages hovering around there. So, but I can't tell right now.
My opinion is, in order to buy a company like this, you need to understand oil.
Yeah.
That's what you need to understand.
Yeah.
So the current price is 15. I went very conservative in numbers, guys, and it's not far off, but it probably seems like a better bet around 10. But again, I don't know what that means for oil prices. I'm assuming oil prices stay the same or they go up slightly. I don't know. I'm just sitting here saying, if you don't understand oil and you don't understand, then why waste your time with this? Like, I understand services and items that are sold. That's what I understand very well. There's no fluctuation in commodity prices, all that stuff, or if it is, it's a portion of the cost. I just don't understand. I personally stay away from these companies because I don't understand unless it's obvious that like it's selling super cheap because oil prices have collapsed and it's just a terrible, there's no way oil prices are going to stay this low forever. That's where I look at it.
If you don't get something, just stay away from it. When I was listening to Manesh Pabrai, he was like, I don't do banks. I just don't understand them. He said Warren Buffett could go and do a bank in 2 seconds. I can't do a bank.
And Warren Buffett likes oil companies. Yeah. He likes energy and commodity.
I do not. Things that he doesn't understand, he just moves on and goes and finds things that he can be an expert on.
Correct.
All right, that's our take. Paul, we definitely have a couple more donations coming in. Would you like to give us an update on our plans for Austin? This is happening.
So guys, we are going to do 50 spots in Austin, a live event, just only 50 spots. You have to be a patron to get it for right now. It's going to be $1,250. It's a one-day intimate event. We will be giving you a gift bag with some books in there and some other things, some EM gear. We're making this as exclusive as possible. Only 50 people will be allowed. It's going to be fun. It's going to be our first time doing it. It's going to be a great time. I already had somebody today tell me they wanted to come, like a friend of mine. I'm like, you got to be a patron. So that's it. I mean, it's just going to be a great event. We're going to be talking about mindset, options, trading, value investing. It's going to be a lot of personal time, asking questions of us personally. There'll be a question and answer session. We're going to survey you guys beforehand to see what you exactly want to talk about. But this is going to be the start of something awesome. And I'm really excited about it. We decided to do this because we're going to be in Austin anyhow. So we're going to do this. It's going to be great.
Our next stock pick is from Fahad. He donated to the, was it again, the National Alliance for Mental Illness?
Of mental illness, yeah. Mental illness.
Is our on
in
mental
Brevard County.
Thank you. This is our charity today. And Fahad is asking about TGNA.
Somebody
TEGNA.
asked, if you guys make so much money, why charge $12.50?
Who said that?
I don't know if it was a joke or not, but they wrote LMAO. Well, Bill Gates is really wealthy, and you still have to pay for Microsoft. So my time is very valuable to me. And again, I'm not saying you're probably joking, but there are probably people out there who believe that. And my comment is, I'd rather just sit at home and have my own alone time than go down there and do something if I'm not going to get paid for it. Because I have other people to take care of, etc. I'm sure it was just a joke, but there are people out there who think that, to which I'd sit there and say, guys, my time is very valuable to me, and that's what I want to do.
Yeah, let's look after TEGNA, Paul. TGNA. It's a media company with broadcast stations and digital sites, 64 TV stations and radio stations across 51 U.S. markets.
To start, I think the PE here, it might be misleading. TV stations, I don't know TV enough, but TV stations in general just scare me because the world is becoming a lot more about, you know what I mean? Like, we're not doing TV stations, it's not the local news as much anymore. It's more about, you get your information from websites, things like. I'm not saying I'm right. Maybe that's what drives this whole 7.8 PE. But it is a $4 billion company, 7.8 PE, profit margin of 17%. That's a check mark. You have 2 check marks to start. They pay $61 million a year in dividends, which is easily supported by free cash flow. Return on assets, okay, 7.5%, nothing great.
Revenue growth over the past 5 years, Paul? Sorry about that.
Yes, no problem.
Yep.
$2 billion to $2.95 billion. But keep in mind, guys, how much of this was driven by acquisitions? You need to look at the acquisition part. How much was driven by acquisitions? Because it's very easy to buy another TV station. Net income, $408 million to $509. Revenue growth is up 50%, over 50%, and profit's not up 50%. Shares outstanding, 215 to 220. I'm already starting to see, I bet you there's a lot of acquisitions going on here. $693 million in cash, $390 in liabilities, a lot of total current liabilities, a lot of liabilities in general, which TV stations tend to have. Free cash flow numbers, $595 to $640 with an average of $450. So guys, right now it would take them almost 10 years to pay off all their liabilities with their average free cash for the last 5 years. And look at the previous years. They had a 700, 500. It just seems like cash flow is declining. I would be very cautious about this business in general. Look, where's the acquisition section? Yeah, look at these acquisitions. They did a big acquisition here, $1.4 billion, and then other minor acquisitions along the way. A $1.4 billion acquisition in 2020, or the previous year. So this is misleading right here. This is a 7 checkmark business. I'm apprehensive about this, and we'll look at it from a stock analyzer tool once Mo is done talking about it.
Mo, are people trading TEGNA?
Not that I've heard, but you might want to throw it on a watch list. Look at this. You're coming up very, very slowly towards the sweet spot, but let's draw this line. Let's see. Yeah, you're gonna. I have a feeling that you're gonna get up, and your candles will start turning green right there around 19. What did I draw that at? $19. I think that's where you're going to start to go. But I have a feeling, and yes, my feeling is right. So there's a lot of moving averages to combat with. You're sitting right on top of the 200. And again, if you break through over that $19, that'll get you across the 100-day moving average, and you'll be on your merry way. So this is something that I'm going to put on my watch list for sure. But it's you gotta relax and be patient with it.
So Mo, right below your stochastics there,
Yeah.
this is volume, which is down, and then the average volume is this line over
The
top
yellow
of
line,
it.
yeah. We can blow that up a little bit. Let's see what so it's not the worst volume, but it could be better. But I like over the past, 2 weeks that we've been hitting average volume pretty much every single day.
Okay,
Yeah.
interesting. Paul, are you on the stock analyzer tool over there looking at TEGNA?
I am. I was also looking at comments before. So guys, look at how conservative I'm being here. I'm assuming they don't make any acquisitions. And they lose 5% of revenue every year versus the high side of keeping the revenue the same. Because I don't think the market for TV stations and radio stations is growing. TV stations and radio stations. Unless you're a billion years old, you don't watch TV stations and radio stations. You know what I mean? It's like listen to radio stations. You don't watch, nobody watches radio stations actually. I'm being conservative all the way through. Look at my PE, 8, 10, and 12. I'm doing super low numbers here. Returns 15. Check this out, Seth.
Go on.
Actually not terrible.
Okay.
The company's currently at $18.
Yeah.
I don't think we're far off. I think if this thing starts to go below $15, you start buying lots of shares. I think even with a declining business, you can still make good money on this company. But I just think don't be suckered in by this 8 PE. I think it's a little misleading because I think free cash flow and revenue and profit has a lot of. Now do more research on this company. Maybe they have some other way, but don't get suckered in by the fact that they can buy their revenue up. You don't want that. You want to look at same asset revenue numbers. Like go find out, hey, the assets we owned 3 years ago that we still have today, how has their revenue been over the last 3 years? Go look at those numbers.
Just in April, Paul, this stock was $21, so it's fallen quite substantially just recently, and it's still a smidge overpriced in your book, wouldn't you say?
Yeah, but last year in October, I think it was great. It was probably a better price.
$11 last year. Yeah.
Let's look at the max price. The highest ever been $45 in 04. And that makes sense. Was streaming anything in 04? No, it was like, oh, this is a great company. It's got lots of TV stations. The future's great, etc. Then it's had problems since. Okay, so go to your. But to me, this actually strikes my interest in going. Okay, maybe I need to check this thing out and see if there's a deep value play. And soon we're going to have what's it called?
Go on.
A watch list where you can sit there and say, hey, let me know when TEGNA hits $12 a share. All right.
Let's see. Yeah, that's our take on TEGNA. Thank you, Fahad, for donating. Brian wants to see any announcements before we move on. Paul, Mo, any announcements? Mo goes live in the morning, folks, if you're new. Mo,
I like this question I want to answer, but go ahead.
go ahead.
So, Pratyush Sabu, do you look at moats and its peers before investing? Great question.
That is good.
This is one of my few criticisms of Warren Buffett. I think the whole idea of moats is absolutely stupid. That is a very controversial statement. The reason being is there's no way a moat exists forever. So even if you're buying a moat today that's all great and dandy, the method he's trying to buy forever. I don't mind buying forever, but I've made a lot of money buying real estate that is not a moat that I just look at as a good. I would rather buy a really good deal than buy a company that's a great company at a reasonable price. I still like those too, but for me, there's no moat. There's like 5 companies in the world that have a moat, and I don't really mean that, but there are not many moats out there. Like Coca-Cola, yeah, that's a moat. That's a
Really?
what was that?
Coca-Cola?
Absolutely a moat.
Oh, I thought you were going to say something like eBay and Amazon.
I think Coca-Cola is a bigger moat than eBay and Amazon. eBay, it does have a really good moat, by the way. eBay, it's really harder, but I look at it going, I just think the whole idea of moats is everybody can make an argument why a company has a moat. Is a moat. It's like, I think it's just an overused thing. It's like, oh, they have a moat. Well, great. What makes it a moat? There's no such thing as a moat forever. You can't have, name 100 years ago, what were the moats?
Studebaker?
Yeah, I mean, they're not around today, or they're not moats today anymore. Look at GE. GE's struggling, and it was the big, I mean, I just don't, I think moat is a really cool thing that everybody talks about because Warren Buffett talks about it. And I know all these value investors talk about moat. I'm like going, listen, I don't care if it's a moat. I'd rather buy a company that's not a moat, that's declining at a fabulous deal, than a company that is a moat. That's just the way I am in my career. Now, if I had $100 billion lying around where I had to deploy capital, yeah, I'd be looking for bigger companies. Even saying moat, I think it's a little pretentious.
Can you explain to some of our new viewers what that actually means?
A moat is basically, it's like, what's a moat around a castle? It protects the castle. So the moat is this company's sitting here and it's very hard for competitors to come take it over.
A large barrier of
Coca-Cola.
entry.
Like,
Yes.
how are you going to compete with, you can't go start a beverage drink tomorrow and go, I'm competing with Coca-Cola. Nobody's going to take you seriously. Google, go compete with Google tomorrow. Microsoft, go create your own word processor. These are moats, right?
Non-moats are creating a YouTube channel and pretending to be a financial expert or becoming a wedding photographer. You just go buy a camera.
Oh,
and
perfect. Everybody who has a camera is a photographer.
Yep.
Right?
That's right. Not much of a moat there.
Not much of a moat, but you can still make a lot of money doing it. I'd rather focus on the part of the investing, which is find a very fairly priced business that has where the growth potential is factored in, whether it's declining or growing. I prefer growing.
Okay. Yeah. So again, if you're new folks, Mo goes live in the morning for morning news, notes, and trading at 9 a.m. Eastern.
Yes, we do.
We will be going live from here on out at 2 p.m. Eastern on Tuesdays, and your Patreon only live stream is 2 p.m. on Thursdays for the top tiers. And trust us, folks, we sit down almost every meal discussing where we're going to go, what we're going to do, how much more content we're going to bring specifically you patrons. We're setting up a camera in Paul's office, if not this afternoon, so that Paul can just flip on the go live and start talking to you guys. We're going to be revamping Mo's morning show so that it can be even higher quality. And there's a lot planned in the near future and some exciting announcements coming as well.
And I love that Julius just wrote, low-key disagree with Paul. Absolutely. This is not a very popular opinion, and I don't disagree. But I just look at it as a very cute thing that people say. Do moats exist? Yes. But do I worry about them? Absolutely not. Because to me, a moat means nobody's taking me over. Just give it time. Somebody will take you over. And look at patents, for example. Great comment before, like patents are a moat. Yeah, but they only last 20 years. So I still look at this thing saying, I'd rather my opinion is moats are great and ideal. But until you have Warren Buffett money where you have a hard time deploying capital, Warren Buffett's, by the way, the first 30 years of Warren Buffett's career were not moats. It was, how do I find these cigarette butts? The last puff of so he just transitioned to that when he had more money than God, and it was hard for him to buy companies, right? Moats to me are a great thing, but don't focus on that. Focus on buying as much revenue and profit as possible for the least amount of money. That's what I want us to focus on. I don't look at moats at all. It's not a part of it's cute, it's adorable, I don't worry about it.
I mean, the Everything Money comedian Matt Jones says we should do a Pablo Escobar skit where Coke is a moat, Paul.
That actually is very true.
Which Coke were you talking about?
That's a very good point. Cocaine is a moat. Cocaine itself is a moat. Compete with cocaine right now. I'll wait. Crystal meth? Come on.
Heroin's pretty dope.
Heroin? Come on. Heroin's
It gets you
like
higher.
What was that?
It gets you higher.
But Coke is for like,
Mo
cocaine's
know?
like, you're really rich or you want to try to be rich. It's like the cool, classy drug.
That's true. What about Molly?
I don't know anything about these drugs.
Ecstasy.
But cocaine is a moat.
Okay, here we go. Paul, do you work out? These are great
Why
questions.
are people asking me these questions
Paul,
about this?
I think you look great in that black shirt.
Well, thank you,
your
Peanut.
biceps and your beautiful.
What's our next company?
The next company is, you might know this, Paul. CVS.
Oh, look at that.
Paul.
So I own
Aspen.
Walgreens stock, and I have options on Walgreens. And people ask me, like, what about CVS? And I don't remember why I passed on CVS, but we'll look at it now.
CVS. Thank you for the donation from
Dynamite.
Brian. The donations are going to the National Alliance on Mental Illness. That is our charity today. And Paul, let's look at CVS.
$108 billion company, PE check, profit margin, not a check, which is pretty consistent with Walgreens. Walgreens had low single-digit profit margins. Dividend yield, 2.4%, pays out 2.6%. Plenty of money, free cash flow, 5-year free cash flow average of 13 and 9, so they can easily cover their dividend yield. Low return on assets makes sense because it's just a boring company. Income statement.
Yep.
Now, guys, with income statement, go look at their acquisitions and go look at their new store openings. 179 to 271. That's probably misleading, but check it out anyhow. And when you do your growth rate in the future, assume no acquisitions, assume just an organic growth rate, which would probably be in line with inflation. And if you do their 10K, it'll probably tell you their same store comparable sales growth, which you'll want to see and make sure every store they have is, overall, the stores they have that are already open continue to grow along the way. That's what matters in retail. You don't want their revenue only growing because they're opening more and more stores that are not getting as much market share.
Julius is telling us CVS acquired Aetna in 2019. I do recall that. Did we do income over the past?
We're doing it right now.
Go ahead.
$5 billion, 7.4. Check mark there. Shares out stizzle standing. 1.03 to 1.31. X. That could have been their acquisition. I don't know. Okay.
Current assets over current liabilities, Paul?
Something tells me this is going to be an X. 55.7 to 60 billion. That's an X. Cash flow. 9.15 to 13.
Wow.
Check mark. With an average of 10, with an average of 9, but there's a few low years in here. Yep. So you might want to average more like 10 or 11 here. But 9 times 20 equals 180. They're currently selling for 108. That's a check mark. It's a very low price to free cash flow. Based on their average, oh wow, this is actually only 8 times, is it 7 times or 8 times its current free cash flow? That's pretty good. Overall debt, what's their overall? So this is one of the factors I'm looking at that I want to get you guys on. Their total liabilities are $98 billion. They generated $12 billion in free cash flow last year. That's 8 years of free cash flow to eat up to pay off. If they want to pay off all their debt, it would take 8 years. I think we're looking for companies around 6 or 7. So 8 isn't bad. And especially for a company like CVS with a lot of leases in there, because look at the long-term capital lease obligation. That alone is $18 or $19 billion. So not bad, guys. Not bad. I look at it going, okay, this could be interesting. So while Mo does a stock analyzer tool, here are the 8 pillars. I'm not worried about this. This is probably pretty consistent with the industry, which is why we're getting rid of this one as a metric. Shares outstanding, somebody go do the research. My guess is when they acquired Aetna, they probably issued shares to do so. But a very low PE and price to free cash flow, and I'm not worried about profit margins. So maybe we buy Walgreens and CVS. Let's go see. Stock analyzer tool. Mo, go ahead, take it away.
I think the reason that we didn't buy both is because we were just kind of making the comparison in the industry and took the one that we favored more. But
yeah, because I think it was misled. I think people were misled by the PE of Walgreens.
Yeah, that's right. So down here, and I'm going to pull up the chart of Walgreens right after this just to show you how similar they are. So right now, it's just going, it's coasting sideways. You guys, you need this thing to turn up because I don't think it's going to go any lower for a short unless the whole market does. But this thing, just wait for it to move to the sweet spot. And look at Walgreens. I'm showing you this because I want you to see that sectors kind of stick together. So remember this chart, and then boom, here's the other one. It's kind of the same. Stochastic's the same, a little bit better. And what we're doing is we're waiting for the exact same thing. We're waiting for a move up and just for engulfing candlesticks. So with CVS or Walgreens, it's kind of the same trade. Throw it on a watch list, be patient, try to make money on both. And I think you're going to do well with both of these. Go.
So I'm looking at revenue growth of 1%, 2%, and 3%. Slight share buyback. Profit margin, I kept the same, 2.5%. Free cash flow percentage, same, 4%. Now, guys, I did a low PE. 10, 12.5, 15. I mean, how many more stores can they open? I mean, what's the growth in this company going to be?
Mm-hmm.
Yeah.
And guess what? I actually think if you buy CVS right now at the current price, you're going to do okay. $83, and it's between $60 and $95 here in the middle. If you can buy it for lower, boy, even better. But I'm looking at this saying, yeah, I think maybe I'm selling puts on this thing at much lower prices. And if you want to pull the trigger on it based on these assumptions above, it doesn't look bad. These are just numbers. I mean, it's just all about, and I think I'm being conservative at the 12.5 PE, 12.5% return, keeping shares the same. I look at this going, okay, yeah, maybe it's not a bad idea to buy it. Are you going to make a killing? No, but you're buying a very stable, big company with a big footprint, with great locations. Just make sure you do the research on their same store sale. In fact, I kind of want to look up the same store sale.
Why do you think Michael Burry of The Big Short is a fan of CVS currently, Paul?
Probably for those reasons. Well, I just said it before.
Mm-hmm.
So I'm going to look at the 10K. And I'm going to look at, I didn't know he was, by the way.
I'm not sure if Walgreens does this, but CVS does a really good job of having like minute clinics and stuff.
Yeah, people are commenting on that. Yeah.
Oh, they are? Yeah.
So you can go there for your flu shots. Almost you can go in as like you're going to a doctor's office.
It's almost like you're going, like there's some that actually have doctor's office. Walgreens is really good at like flu shots and boosters and all that. But I feel like CVS is better in that way. So I bet they're going to be better at making that transition.
Oh, wow. Look at this.
Go ahead.
Same store sales coming in hot.
Check, please.
Guys, look at this. Same store sales increase total 2 years ago, 6%, 3.7, 5.6%. Same. I love that. I effing love that. I think my numbers are conservative. Yeah, this is a good. This is good. I think my numbers are being very conservative.
A little too careful?
My numbers being a little too careful?
Yeah.
Yeah, I didn't expect this.
That's
pretty high. To have this kind of same store sales growth with such a big company, that means that stores are open to, they'll give a description of what it means.
Yeah, there's pharmacy.
Everything is up. Everything is up. Same store sales growth. Not a ton on front store, but pharmacy's up. Everything's up. Prescription volume. Yeah, guys, I think this is pretty solid.
What about
Yeah, let's put CVS on our list, most of you.
I already put it on there.
Oh, good boy.
Mo? I'm sorry, Paul. While we cut over to Mo, will you pull up Walgreens that we did this weekend real quick? While Paul, do you want to look at an option for CVS right?
Yeah,
quick?
let's go look at options for CVS. That's a great idea.
Pull that up.
What's your name again?
It's Jeff. Go ahead,
All right, thanks,
Mo.
Jeff.
For Walgreens?
This is Walgreens. We did this past weekend, folks. One of our banger videos of what we were buying, including Baba, Intel, and Walgreens. I bought all three. And Mo, tell us why.
So I really love this because I think that we can make a really good run on this thing. Not only are they a great company, but if you think about it, if let's say hypothetically that this Delta variant is for real and the world's going to go to chaos again. Well, you got a good company here. Let's say that doesn't happen. People are still going to go and use Walgreens, and I don't really think that they're going to get hit very hard in anything. Total speculation, but let's just get this thing in the sweet spot, and this thing has room to run to like $56 a share safely, I think. So with that big drop that it had right there, unfortunately it wasn't a gap, but these things can definitely fill when you have big candles like that. These things can definitely fill very quickly, and I mean, I like it from a trading perspective. I know that a lot of the ambassadors are liking it from a trading perspective. I like it from a value perspective. I have options on it. Walgreens is great. So did you find anything on CVS?
So guys, what was my stock analyzer tool data? So let's say I want to do $60, just to be the low end of the mid.
All right.
And I go out to September 17th, $60 a share. All right, it's not big money. I'm talking about 5 cents.
Why don't you go to
Nothing special.
Why don't you go to like November?
Well, I'm also going a much lower price. I'm going literally 25% drop.
Why don't you go to like November? Because it is a 25% drop.
It's not going to be very good. Remember, by the way, with big companies like this, that's not very good for them.
Why don't we go to January 21st?
Okay, so let's go to January 20th. Oh, no, January 21st.
Folks, I would say we have made a better effort looking at options for you guys. A lot of people are asking. So the last videos we did, we definitely looked at some options. We are coming out with some videos about Cisco, about AMCX. We do some retail-specific videos that include Sleep Number, Abercrombie, Dick's Sporting Goods. We do tech stocks like Apple, HP, Amazon, and Baidu. We looked at EA Sports. All of this is coming out in the next couple days. And so, yeah, Paul, let's get back after to
So, guys, for January 21st, 2022, even at $70 a share, you're getting about 2% money, $1.40 per share. You're going to get 2% to wait 165 days. It's not great. It's like 4.5% return. But this is a great company. If you want $60 a share, you're getting about 1%. So you make about a little over 2% return. But again, it's better than sitting on cash. If it's a company you want, it's got to drop 25% from these levels for it to go there. So if you're looking to sit in cash, yeah, maybe you're sitting there saying, listen, I can 100 shares, that's $8,000 of my capital. I'm going to make a little over 2% on, better than zero. That could be your philosophy. Or you can be like me and say, I just want to buy shares of it, and maybe I wait a little bit. But I look at it going, well, maybe I start dollar cost averaging at 70 and go, okay, I'm going to put it 70. I'm going to go out the future, go 65, 60, 55, go lower. And as it goes lower, I make more money. I get more income in, and I build a position. I don't know, but I look at this saying, guys, at $70 a share, if you like it, you can get $1.40 per share for waiting until January 21st. So your risk is between now and then, either the price falls completely below 70, which I don't think is a risk. It will very well happen, but you're going to buy it at 70 anyhow. But the real risk is information changes, and you look at the company 3 months from now, something comes out, and you go, oh my God, this sucks. I don't want to own this company at 70.
I mean, let's go to one of the worst times during, COVID. It was March 16th. The low was $52.21. So that was a pretty bad time back then. And we had an extremely hard fall. So,
hard and fast.
Yeah.
So I don't know.
Yeah.
It might not be a bad idea.
Right.
But it's something that I'm going to keep on my radar going forward.
Yeah, you're right. I think Nate just put in the comments, we do have a whole video coming out about options trading this coming week. So yeah, we're getting after it here. Paul, I have to introduce you to one of our newest fans who I am simply in love with.
Meet Kevin with the MEAT.
Meet Kevin with the Rest in Pepperoni, a Kevin logo, a big follow of ours now. Kevin, if you're in the Discord, please message me because you got a lot of this and you got a lot of these, Paul. Remember from Step Brothers, Paul, you got a lot of these. Anyway, people are loving this guy. And he's just the name alone, he just wins the internet here. And he is asked to see the ticker symbol is HIBB. He gave a donation to the National Alliance on Mental Illness. That's our charity this week. HIBB is Hibbett Sports. Hibbett Sports is a U.S.-based a retail sporting goods store.
I know them.
I've never heard of these folks, Paul. Yeah. And I'm guessing you haven't either, Paul.
This is retail.
Go ahead.
So first things first is look at same-store sales. Always with retail. Secondly, it is retail, so make sure you understand the future is not going to be as exciting for retail locations as it is for internet. I don't know how their internet. I've never even heard of these people before in my entire life. What was that?
They're at the mall. They're at the mall.
Which mall?
I don't know. I've seen them in malls.
Oh, okay.
Not ours.
Actually, Blunt Gang is saying that HIBB is a little book stock, so I actually have it in my portportfolio and didn't even
And by the way, I knew it was a HIBB little book stock. You know why?
Go on.
8 PE and 21.7 return on assets.
There you go.
So when I bought my sister's little book stocks, I probably bought this for her and wasn't even paying attention. This is one of them. So let's look at it.
That's me too. Go ahead.
So 8.8 PE, profit margin at 10.5, pretty decent gross margin, 5-year free cash flow. So this is what I don't like. Last year was 265. The last 5 years about 95. So I'm not going to focus on last year's free cash flow number. I'm going to focus more on the 5-year average. Income statement. Wow. That's a lot of growth. 966 to 1.66. But guys, look at the previous 5 years. I had to think this is a lot of opening stores or acquisitions here because it's a big jump. Big jump.
How about profit over the last 5?
54 million to 175 with a loss in the middle. Shares outstanding, 21.3 million down to 16.3. So check mark there.
Wow, we're looking fly here so far.
Balance sheet.
Current assets over current liabilities is pillar number 6, Paul.
475 versus 210. In fact, their entire liabilities are paid off with the cash equivalents in their pockets. So that's good. That's a very good thing. That's a healthy thing. Free cash flow. Cash from operations less your capital expenditures, 58.9 to 265. That's a check, but I'm ignoring the 265 completely because I never had that before. So I'm going to look at the average being around, and then that year was a weird one. So let's look at this. Let's look at this level. Let's look at an average of $55 million.
Okay.
Times 20 is 1.1 billion.
Yeah, the market cap is 1.4 billion.
Yeah, I think it's misleading because of last year's free cash flow. I just don't think that's a reasonable free cash flow number that was driven by change in inventories and change in working capital. I think it was driven by a big jump in revenue. They had no acquisitions, huh? They had no acquisitions last year. All right, let's go to Stock Analyzer 2 after Mo does his shtick.
Mo, are people trading Hibbett Sports?
Look at this.
I can't imagine.
Oh, wait, I got to erase. I struggle with that. Look at that. That's incredible since COVID.
Yeah.
Sports are disruptive. Mm-hmm. So right now it's definitely a downtrend. So if you want to do a short on it, let me look out a little bit. So you're definitely holding a support line right here. The next one is here. So if you like to short, all you really have to do, let me leave that there, is create these engulfing candlesticks down. Obviously they're going to be red, but this is something you can for sure short, and I think you can catch a good run on this thing below $75 a share. You're just going to need a lot of selling volume. But look at that stochastic. When's the last time we saw a good shorting stochastic coming through the sweet spot? We usually see them, they're already down here, or they're like this. They have this angle just straight down because everything is just so volatile in this market. This is the first time we've seen a real gradual one. So if you want to short it, throw it on a radar. At the same point, if this thing does a sweet spot reversal and gets up here, you're going to be making new all-time highs, so you can go long on it too. So this is definitely one to keep a watch on.
Patrons, if you're like me, I'm definitely scared about potentially shorting a stock. And so I don't like when Mo talks about it. But we have some specialists in the Bidnast who are definitely shorting.
Yeah.
Right?
I mean, I was just reading today that Bogdan, he's the shorting man. He made like 5% on 2 different stocks today shorting them. There's a shorting seminar that I teach you guys. I think it's about maybe an hour long, maybe it's 30 minutes. But anyways, there's a lot of people, there's a shorting channel, and all they do is just sit there all day and go over short. So even if you don't want to short, you can go and learn how to short, because that will be very important for you when this market does fall apart. Going to March of 2020, you could have made a lot of money shorting in a very, very short amount of time.
Before we get over to the stock analyzer tool, Ishan is asking, by the way, folks, if you'd like to upgrade from your current Patreon tier and join the Bid and Ask, you can do so. It's not a free trial membership. You do have to pay. But for 30 days, you can try out the Bid and Ask, try trading, getting Mo on a daily basis. And if you don't like it, you can drop back down to your original Patreon tier. It is on you to email help@everythingmoney.com and let us know that you went back down. And if you stay in for 32 days, you will be in the Bid and Ask for life.
If you come into the Bid and Ask, you're going to be stuck anyway, just based on the conversations.
Yeah, but it's the after hours chat.
It gets wild.
It's the best Discord chat. Mm-hmm. It's hilarious. The people in the Bid and Ask are incredibly supportive. Paul, let's get after that.
So I went to their 10K, looked up comparable stores. So last year was a fluke year, 22% growth, and they're not going to look at it. But look at the previous years. Pretty good. 2.2 and 5.3% same-store sales. It's retail, guys. You're not expecting to see 10% jumps in same-store sales, at all. So I went and put it in our stock analyzer tool. I actually probably should assume lower. So I made these assumptions. If you look at profit margin, it was 10% last year, but previously the average was 5, 6, 7%. So I lowered it. I lowered all these things. Look at my PE, and look at this, Seth. It's actually not bad.
Go on.
It's actually, I think if you bought it at this price, you're going to do pretty well. As long as it can grow store sales at 3% a year and use the free cash flow growth, and this free cash flow is consistent. Wait a second. You know what we did wrong?
Go on.
Oh, no, we're fine. We're fine. I did it right. Nope, we're good. Oh, man, this isn't bad. This is not bad at all. I wonder how many stores they're closing.
Closing, huh?
Well, yeah, you want to look at how the business is doing. During fiscal 2021, we opened 28 stores and closed 42.
Okay.
So they're net closing stores, which I like to see. I like to see that.
I'm sorry?
I like to see that. I mean, it's retail. I look at going, hey, listen, we're closing stores that aren't doing well. We're opening more stores and growing markets and things like that.
Oh,
so
I would figure closing stores is a sign that the company's going down the hill.
Well, or they're just being more efficient. That's another way to look at it.
Or they're going to restructure locations.
Yeah, I mean, if, these are the things to look at. How much debt do they have long term? So one of the things we're looking at now is they have how much debt long term? 190 million. So they can pay it off with, 2 years of free cash flow. Call it 3 years on the high side. That's not bad. Guys, I look at this going, okay, if you believe in this company, you like it, let's even look at their store. Like, what do they look like?
I don't know anything about this.
I don't either.
The dang website here. I mean, Hibbett.
Oh, there's one in, where the heck are they?
Oh, okay, here we go. Hibbett. Oh.
Akron, Ohio. Wait, there's one in Arlington Ridge? What the
Nate,
heck?
check this out. Here's
they're around here.
Hibbett City Gear? Is this I don't even know. Oh, look at this. Oh, it's kind of stylish. Okay, pretty cool. Look at that.
Euclid?
They remind me of like
Akron and Canton.
Like a mixture of like Foot Locker mixed with Champs Sporting Goods. Is Champs still around?
No.
Can't be.
I don't know. I don't think so.
I don't know. But that's kind of what it reminds me of.
Who's their demographic?
We did analyze Dick's Sporting Goods.
Of course, Dick's Sporting Goods is better.
Yeah, I mean, for sure.
There's no question. They're the top dog.
Yep. Let's see. Keep going. Sorry, keep writing. I wanted to clarify for some folks, when we do switch off of Patreon, I don't mean to change the subject quite quick, but when we switch off of Patreon and move to everythingmoney.com, all your pricing that you've been locked into is all staying the same. There's not a new pricing structure. If you, for our OG homies that joined the Patreon last November for $8, you will continue to be paying that for the very foreseeable future to get the software and all the new software that will be coming out this year and next. So, Paul, final take on Hibbett. It's definitely intriguing.
It's interesting. If you like the company and you have a personal affiliation with them in the sense of that you've been to the stores, doesn't seem, as long as my assumptions are correct, you're buying it today. You're going to make 12, 13% of your money over the next 7 years. Now, Somebody asked a good question. Paul, how important is it diversified across sectors? Guys, I want everybody to understand something. Diversification, all that is sleeping well at night. That's all it is, right? Think about it. The only reason to diversify is that you sit there and say, hey, I want to mitigate my risk so I can sleep well at night. Because if you really truly, the big guys like Warren Buffett, when they were smaller, like at one point, Warren Buffett had like 40% of his money invested in one company. Their philosophy is, if I know the company inside and out, I should put as much money as I can into it to make a. Guys like Sven Carlin, I think Sven says he only invests in 10 companies. Mm-hmm. That's 10% for each one. I believe in diversification. I believe in having 20 to 40 companies that fit a certain criteria. But guess what? I'm not doing the research they are. I'm not going out there and interviewing ex-employees and customers and clients. No, I'm not doing that. I'm sitting there saying, hey, everybody has their different philosophy. I told Seth yesterday, I told everybody yesterday or the other day, there's no way in our Patreon that I'm going to be the best investor in that group. No chance. There will be other people better than me, but everybody's going to do well in their own sphere of influence. My sphere of influence is high level brands that I know that are selling a little bit of a discount or something like that. That's it.
Speaking of discount, we will be offering discounts if you want to join the Patreon moving forward on a yearly basis. So you want to make one annual payment?
Yeah, we're going to be able to do that. I don't know what the exact numbers will be, but there will be some sort of discount, 5, 10. I don't know what it'll be, but it'll be something that we give everybody to be able to pay up front.
Paul, besides the donations that we took 5 today going to the National Alliance on Mental Illness, Paul. There has been a lot of questions revolving Nintendo, Mo. I see it in your morning show. People want to look at Nintendo.
Really? Can I make a comment first?
Please do.
I'd like to thank Leah, Iman, Nate, Simon, Theo, Ralph, and Nathan. Oh, 2 Nates. And Nathan for signing up during our live stream. Thanks very much, everyone.
Folks, if you want to see us maybe collaborate with some of your other favorite and value investors, please go to their videos and comment, because some of them won't just email us back. So just help us, because they need to check their damn email. But okay, guys. Paul, do you want to take a quick look at maybe an 8-pillar look at Nintendo?
What's the ticker symbol? Isn't it 5? 5
yeah,
tickers?
I don't know if we get it even.
Oh, really? NTDOY.
Oh, I don't even get it.
I don't get it either.
What's NTO?
NTDOY. We've looked at Nintendo before.
That's not the right one.
Okay, Paul, the other company that I wanted to look at is ZUMZ. Can you give this a quick once-over? Zumiez?
Oh, this company.
Zumiez. Specialty retailer engaged in the sale of blah, blah, blah.
Is this skateboard people?
I don't know, but if you look at some of these numbers.
Blue Tomato.
You know them, right?
Yeah. Oh, Nate. Oh, hold on. Nate, you're on. You got a microphone there. Who is this, Nate?
I just know that they sell like some skateboarding gear, graphic tees.
They're kind of like.
Is that you got your sweater right there?
They're kind of.
No, I'm wearing a Naruto sweatshirt. I did not get it from Zumiez, but I like it nonetheless.
What's wrong with this person? There's a.
I got him, Mo.
Thank you. What the hell's the matter with you?
Oh, okay. ZUMZ. Sorry, Mo, is a little book stock, and it's a skateboarding company.
Yeah, it's kind of like PacSun, but they sell other stuff too.
Let's look into it. Blunkane, you know I love you, bro.
Cool.
Let's get after it, Paul. It has a $1.8 billion market cap. Whenever you're done bumbling over there,
Not bumbling.
the 700 viewers.
A funny meme to somebody.
Okay.
All right, so $1 billion market cap, PE of 9, profit margin of 11%, check marks there. Free cash flow, again, another example, really high free cash flow last year, but way higher than the 5-year average, so be apprehensive about that. Return on assets, pretty solid. This might be a certain, whatever stock.
What, baby?
What's that guy? Greenblatt.
Oh,
Magic Formula.
Magic Formula stock. I think it is. Yeah, keep going.
844 in revenue.
Oh my gosh.
1.13. Again, they do it through retail, so check on their same store sales. Net income 23 to 123. So guys, I'm just striking out this year. Like I'm looking at this, and we'll look at that free cash flow. Shares outstanding, not by much, but they are increasing their shares outstanding, not by a whole lot. Maybe, what is that?
2%.
Not even 2 or 3%.
Yeah.
Over the last 5 years total, not even per year. Balance sheet 566 versus 193. They have plenty of money to pay off all their debts. Even better. So that's an ultimate of check marks.
I was going to bring this up, Paul. I have a super itchy nose today. So every 10 seconds, it looks like I'm picking my nose. But it's this mustache and the weather. It's got me itchy today. So for this nose picker, the patrons who are trying to get the screen grabs of me picking my nose, you're probably going to have luck on this show. Keep going, Paul.
Okay. So, free cash flow. Again, 174 versus 27 is a check mark. I'm eliminating the 174. So I'm taking away 155 divided by 5 is 30. So it's about $40 million a year in free cash flow times 20, 800 million bucks. So it's a little expensive unless you believe that the sales are going to grow at a nicer pace. Okay? Because I'm taking out the 175 last year, looking at the previous year, etc. I just look at it going, maybe you can justify this price based on 20 times free cash flow. But again, we'll go to the stock analyzer tool. Let's see here. Stock analyzer tool. Let's go 5 years on this one. Okay, I also want to see, before we go any further, I want to find their ZUMZ, right?
Yep.
Yeah.
PIMP.
I'm actually checking to see if I own this. I don't even freaking know.
Well, because it might be you might not have picked the $1 billion companies.
Okay.
I don't know if you did or not. Let's look at their same store sales. I do want to see same store.
Yeah, I do own this. I'll be darned. Look at you go. How funny.
Is it telling me?
I like their store. If I was hip and wanted to go Richter,
You're hip to the jive, Mo. Come on, look
Yeah.
at you.
if I want to do some snowboarding tricks, I would.
Oh,
like
wow.
to
Look
go
at these. Okay, so yeah, they're growing their same store sales.
there. Nice store though.
Taking out last year, they had a little drop. So 5. Okay, got it. Not bad. I like it. So let's go here. Let's go 3, 4, and 5%. Share change. Let's do 0.5, 0, negative 0.5. Profit margin. See, the profit margin is misleading there. So I'm going to go 5, 5.5, 6. I'm kind of surprised it's that low. Free cash flow. I'm being conservative here. PE. This is probably too low, but we'll start there. And let's go analyze this. Okay, so based on this, guys, it's a smaller company. It's not some big Goliath. So you want to be more conservative. These companies are more likely to be out of business, but also more likely maybe to be bought out. Who knows? If you believe these growth numbers, that they're going to grow 5% a year, they're going to buy back 0.5% of their shares, they'll get a 6% profit margin, 7% of cash flow, and sell for 15 times. Buying them today is probably a pretty good deal. If you believe all these numbers, you're probably going to make 10 to 12% return. If you wait a little bit, maybe buy in the low to mid 30s, you'll probably do a lot better on lower expectations. So it's really a field play here. If you really like the brand, you really think it's got a lot of potential, you believe those numbers I put up there, go for it. If you're like, I like it, but I want to be more conservative, wait till it's low 30s. That's it.
Okay.
Yeah, on July 1st, I got into the little book stocks. I put 250 grand in. I am down 5 grand since I bought, which was hilarious, Paul. I was a big fan of this, and I still am. It's just for our new people jumping on board with the little books. I was saying how I made like 59% last year.
Yeah.
And
normal. Now you are.
Well, I'm down, obviously, so down a smidge. So
That's the idea, though. Balances out.
for sure.
Out.
So, all right, Paul, it is currently 3 p.m. Eastern time in the afternoon. What are your final thoughts on the world?
Guys, love everything we're doing. Love everything you guys are doing. There's a lot of great questions coming in the chat. People are really learning. People are sticking around in the software. Like I tell people our cancellation rate, they're like, how is it that low? I'm like, people like our stuff. And we're not even giving you everything you're going to get yet. You haven't gotten real estate analyzer tool. You haven't gotten momentum trading. You haven't gotten the separate videos for you guys versus YouTube. This thing is going awesome, growing like crazy, and thanks for trusting us with your money, and thanks for learning. I get so many emails from people, so many messages from people on Instagram. Follow me on Instagram at Paul Gabriel, where they say, Paul, thank you so much for teaching me. It's awesome. I'm like, yeah, but I can't force a horse to drink. I can lead you to water, but you have to drink the water yourself, and that's what I love about it. Like you guys should be thankful that you guys are so open to these ideas, because if you're not, it doesn't matter what I say to you. If you don't buy into it, I could tell you, I could literally be Jesus Christ coming down here and say, invest this way, and you'd say no. But if you're doing it, that's the point. You guys are the ones that are open to the learning of it all. And I like the way I do it, and I'm not saying my way is the only way by any means, but the rational mathematical way cannot be argued at times, where if you sit there and make assumptions that are unreasonable, that's where I have a problem.
All right, folks. Paul, we got one more donation, but they were asking for a VJ is asking for a bank stock financial group. Can't do it. So VJ, we owe you. I'll make note of it for next week. If you join us, VJ, we can hit you up. It's a $20 donation, VJ. We're asking for $50 for our charities, but if I have your name down, if you see us on the next live stream, or if you're in the Patreon only, live stream on Thursday at 2. We will hit you up then. So, all right, folks, that is our take. Obviously, we're super appreciative. I would say we're incredibly proud of what we're doing here. Paul, myself, and Tim started this show, a lonely show by ourselves many years ago.
And our number one fan, Matt Jensen, my chess coach in Minnesota, just every single day we talked about it. Like whenever I have a chess lesson, we go through the numbers. He's just like, I remember asking him, "Can you please show up to the live stream
so because we had like
need
7
bodies.
or 8 people?" Yeah. And so actually, folks,
Matt Jensen has been there from day one.
We look at some comparisons. And like, for example, last month, Tim came up with this stat that he found that Tony Robbins has 1.2 million subscribers, and we got more views than he did last month. So
today we hit our first number. We're 28 days. In the last 28 days, we broke over 1 million views on our videos in 28 days. July was over 1 million views, but it was 31 days.
Yeah, it's astonishing, folks. This is not taking that long. I was always astonished.
No, it's taking forever.
Well, I mean,
now that once the ball started rolling,
yes,
it's been awesome. But we put a lot of time and money into this, and it finally paid off, and it's going great.
Paul really wants this to be, and currently thinks it is, the #1 financial channel on YouTube. We just need more people to see us. So share this with your friends. If you like our style, join the Patreon, and we can be pals. And yeah, that's our take. Thanks again for supporting us and supporting yourself. It's great to see so many people in the Patreon and investing, and so many wonderful success stories, Paul. It's a great thing that we're doing, and we're happy to have you guys on the ride. So that's our take. We'll see you next live stream. We'll see you on Mo's morning shows. And yeah, we love you. You know, all my love. Yeah, thanks. See you guys. Appreciate it.
I saw 7:45 was the